Good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 23rd of May. All right, it's Sunday morning where I'm living right now, and we have a lot of red across the market. We have everything down double digits across the board. We are going to focus only on Bitcoin at this point because so goes Bitcoin, so goes the rest of the market. Let's do this from the top down. We're going to go to a log chart on the monthly chart, and the question is this an uptrend or a downtrend? Right now, this is still an uptrend. We have not seen any kind of move to make a lower high, lower low in this condition. And you can see that previous moves that we've had over the years that have given us troubles have all featured some type of a lower high that's set up before things got really, really bad. Right? So we have not even gotten anywhere near that. So you could see in 2018, this was the initial move here. We dropped initially, bounced up, and then the worst of it really began. So one of the things I'm going to say to you right now is that the initial move is not that important, because the initial move down can create one of two things to happen. You can either see a slingshot move from here, or you can see it pull into a lower high and then roll over, and then the ugliness really does begin. So I'm really going to recommend to you at this point that you've got to find a way to keep your head out of the news, out of the Twitter sphere, out of any other kind of opinion that's out there, because it's really not going to help you. Even though you're going to scan out there for people that say, hey, this is going to happen or that's going to happen. And you're going to feel like that's going to give you some sense of certainty, like, oh, this person knows what's going on and they're really with it, so I trust what that person says. Unfortunately, what that does is give you a raging case of confirmation bias. You're going to shut out every other point of information going forward unless it agrees with what that one person says in terms of their prediction for it either going higher or lower. And this is why so many retail traders just get completely destroyed during these moves, because they just didn't see it coming, because they had everything banked on one specific direction. So that's the challenge right now. Is this dip going to be bought and create higher prices down the road? Or is this the beginning of something worse that is going to give us one shot off the bus here coming up on the bounce to the lower high? Okay, now let's go down to the weekly chart. We'll stay with a linear chart for now. We don't really need the log time frame on that. And now what we're going to do is we're going to look at fib retracements. So fib retracements, we're going to take this swing, and in my estimation, the last major weekly swing that we care about is the one that started back last summer. Yeah, it's a long time. And to me, we've just tested the 61.8% retracement of the swing, which is close to 30,000. So you can see how the price came down to 30,000 and tested that. That's obviously a very important level that the market's going to be watching for. So again, is this a downtrend? Yes, it is. This is a downtrend because we've gone from a higher high. We printed a lower high up near 60,000. And then as the price crashed through 47,500, that confirmed that lower high, lower low combination and created a downtrend. So monthly uptrend with a swing to the downside, just a pullback on the monthly chart, but it's a full-on downtrend showing up on the weekly chart. So which one wins? Rule number one says that larger time frames dominate the trend. And the monthly chart still dominates the trend until proven otherwise. Now, the only other price level that makes sense to me here on the weekly chart is, and you're not going to want to hear this, but it's the swing test at 20,000. So that is in play. If we squash this up a little bit better, this will probably become a little bit more apparent. Here's some volume spikes, but big move into obviously the end of 2017, 2018. And that level really did create this whole massive, huge cup with handle pattern that the price broke out above at 20,000. So 20,000 is obviously a very important price level, as is 30,000 right now. So those are levels of interest right now at the weekly chart. We have the trend, we have fib levels. As long as 30,000 holds and the price bounces up from here, then what we have to do is we have to look out for potentially the lower high setting up. That's going to be very important because that's going to be our last chance off in case the price decides to drop from there. This will offer us the best chance to get out with a nice profit for most of them. And then we can watch the price drop from there as we're in cash, and we're going to feel completely fine with that, if that is what happens. Otherwise, if the price decides to rally from that point, then this is going to be a very important point as well, too, because that's going to represent really the last shot at a 5-digit entry down at 30,000 that people are going to look back and say, well, why didn't you buy at 30,000? But, you know how it is, right? It's always easier looking backwards in the rear view mirror. Okay, down to the daily chart, and there's some very important things going on here. I've got the volume profile up, and you can see how important this level is here. So for about the last year or so, this has been one of the biggest important levels. There's been a lot of trading around this level, which is around 34,000 for that node. Guess where the price is right now? So obviously I want to see the price hold this node, because if it does not hold 34,000, then there's a quick trip down to 26,000. Actually 24,000 is the next node, and then the swing test at 20,000. So this has got to hold for right now. If this does not hold, then we're going to see 20,000 in a hurry, and it could happen overnight. Now, we really haven't seen any levels of capitulation yet in terms of volume. This, to me, is not enough. So let's go back and let's learn from some of the previous moves and see what type of capitulation volume really provides that sort of end of, just screaming over the hill waterfall decline. Let's go back to the end of 2017, and the first capitulation that we had several of them. We didn't really have anything like, just a straight waterfall decline that really propelled the market higher from there. We had a number of these capitulation events. And so what we can do is we can look at the volume during each one of these. So the initial move down was at the very end of December in 2017, as the price explored 11,000 from above, bounced back up again. And you can see the volume during that specific day was about 57,000. About 57,000. And then as we got down to the next swing down here, the next important one was in early February. And this also was lined up with a little mini crash in the equities market. So it's not surprising to see margin calls in the equity market affect crypto as well, too. This one had a volume of about 70,000. And then from there, some of the other lows that we've seen, 28,000, so that wasn't significant. Let's go back to this low here in March of 2020, and let's see which one is significant here. And the volume for that specific day was about 58,000. All right, so 58,000, and that was on this day, 12 March. So Bitcoin actually did bounce before the rest of the market, where the rest of the market did bounce, and the 23rd of March was the low there. So you can see that these volume numbers for capitulation, high 50s, as much as 70,000. And this is on Bitstamp, by the way. This is on Bitstamp. Each exchange is going to have different volume numbers, but this one has got the longest history, so this is why I'm using Bitstamp. So now let's go to the recent heavy volume day that we had on 19 May, and this is only 32,000 so far in terms of volume. So unless there's a big issue with Bitstamp, then this is not the type of capitulation volume that I'm expecting to see, which is going to be somewhere in the 50s, 60s, 70s or so. Now, capitulation typically happens when price does one of these waterfall declines where it just in a matter of minutes, and we did see that the other day, in a matter of minutes, the price will drop thousands of points. And this is where people stops are hit. This is where people just finally say, that's it. I'm out of crypto. I got nailed 3 years ago and I'm out again. And this is where they just panic and sell. They can't stand it any longer. And these are the decisions that typically we look back and regret years later because they form a very emotional bottom. And typically they are bought with both hands by institutional support when the liquidity is that strong. And these are magic conditions for institutions because there's massive, massive liquidity. And so this is where big players can get on board and not move the market. This is the problem when we didn't have that volume on the breakout back here in early April because no volume and institutions were not going to chase this. So these are the conditions where they're much more likely to step in, and it's going to be the exact opposite reaction to what most retail traders take. Okay, so let's summarize here. On the daily chart, we have this high volume node here, which is right around 32 to 38,000. This level does need to hold. I'm a little concerned that this is showing as a potential bear flag in a smaller time frame. This looks more like a 5-hour flag pattern. In fact, there's just a series of flags which is showing up here. And each one of these is subsequently consolidating and breaking down. What we need to see for this to arrest itself is a break above there and a change in polarity, like what we had back here, right? So a change in polarity to higher highs and higher lows. So far, we've not seen that yet. And this is coming all the way from 53,000 all the way down. This has just been one series of flags after another. If this is going to arrest itself, it's going to find some support. There's going to be a high volume level around here where just, this is where the waterfall decline happens. This is where capitulation happens. Rarely do we see the price just stop and reverse and say, okay, that's it. Enough selling for today. But we'll need to see this trend line broken to the upside. We'll need to see the price putting in higher highs and higher lows. We'll need to see good volume on that reversal for that. And this is going to happen at a smaller time frame first, and then it's going to flow ultimately higher to the daily chart. The daily chart, you'll start to see it break higher from here. But again, just like what I said earlier last week, was we need to see the price go lower before it can go higher. So even if we do see a break up, it's not going to just go straight up like this. It's going to have break up. It's going to fall back down, put in a higher low. This is going to be that scary higher low that I talked about. And this will be on smaller volume this time. This will be on smaller volume. And then as the price breaks above there, then that's the beginning of the recovery rally. But again, we don't know at this point if that's just going to form a lower high rollover again, or whether it's going to head higher. That's still in question at this point. I don't know. So guys, it's like I say every time, what you have to figure out, and this is on a day-by-day basis, what will I do if the price goes higher? What will I do if the price goes lower, or if it goes sideways? Make your decisions before you enter these positions. And this is why it's so important to do that versus times of panic like this, where invariably the wrong decision gets made. That's it for this weekend's report. I'll be around this week if you have any questions. Otherwise, we'll see you online probably Wednesday. And good luck to you all. Have a great weekend.